Hi, it's Gail with Traders Help Desk. In this video, I'm actually going to go over stocks. Now, I've had a lot of clients that ask me how to trade stocks. I don't actively trade a lot of stocks. I have certain ones that I trade, and they're more long term. But I wanted to show you because it also shows you just how powerful the indicators are, any market, any time frame. So in this example, I'm using a 30-minute time frame as my trading chart. Now my congestion zones that I have put onto the chart are actually from a 90-minute in the equivalent of a daily chart, which is 390 minutes. And I want to show you exactly how I would trade this if I was going into it. Same exact trading methodology. We're at an ATR. We have diverging volume, or we are at a congestion dot and we have diverging volume. So one of the core principles that I teach my students is if we flip an ATR, then we will go back to test the new ATR. So if we go from blue to red, then it will move down and then it will return and test that red ATR. And you see this. I've got Goldman Sachs, Verizon, Duke, Apple, PCLN, which is Priceline, and Ford. Most of you know my grandfather worked for Ford, so I'm kind of partial to it. Now, this is exactly what I'm talking about. We flipped the ATR here. We went from blue to red. I'm expecting it to go back to test the ATR. It does. There's your volume divergence right there. Okay. Then it comes down, almost gets to the congestion dot. You see that the buyers step in right here, goes back to test the ATR, which is pulled down, and then it's kind of history from there. Over here, you have divergence on this bar. Again, it goes down, comes back to this congestion dot. Again, sellers step in on this bar. Again, it goes down, reaches a congestion dot. As it reaches this congestion dot, which is lower than all of these lows, you have divergence. This is what I'm looking for. We're making lower lows, okay? We are not, and I repeat, we are not making lower lows in the volume. There's your volume divergence. You're going long. Of course, it gaps up, flips the ATR. What happens? It comes back to test the ATR. This pattern happens on every market in every time frame, okay? As you can see right now, Goldman Sachs is at a resistance area on a higher time frame. I would be expecting it to bounce back and actually at least test the ATR. We see exactly the same patterns on Verizon. Flips the ATR, comes back to test the ATR, does it on a decrease in selling volume. Then it goes through, it breaks through, it is at an area, and you can see it over here to the right, of resistance. What happens? Comes back down, actually gaps down, goes back to the ATR. Now, if you look on this one, as it's approaching this ATR, buyers are increasing. That normally indicates what? It indicates that the ATR will be flipped. That means it will go from red to blue. Exactly what happens, forms that congestion dot here. What happens? Comes back to test the ATR. I keep saying that because I want you to understand that this happens on every single market. Now, if you can look here, you can see that on Verizon, we're making higher highs right here, and The buyers are doing what? They are decreasing. Okay? That tells me it's going to come back to the ATR. As it tried to come back to the ATR, you can see that buyers actually stepped in because that little hash mark flipped to the upside. Then they go up, they test this area again. It is still resisting price, so I think we will come back and test 46.92. If we go over to Duke Energy, which is one of my favorites, mainly because I have to pay Duke Energy for my light, so it makes me feel special to actually be able to take money out of the market. Flips ATR, goes back to test the ATR. It does it. You can see from here to here, there's no increase in the buyers. What happens? Down it comes. Flips the ATR from red to blue, comes back to the ATR. I do think it's going to come back to 74 at least, and then I would want to analyze the volume there. Go down to Ford and as I said, my grandfather worked for that, so I'm partial to it. You can see flip the ATR, tested the ATR, seller stepped in, moves down, goes back to test the ATR, happens to test the same area over here, does it on a 50% increase in volume, actually probably more than that. That tells me it's going to go down again. Goes down again. Then it flips the ATR, comes back to test it, flips it again, comes back to test that same area here, comes down again, comes back to test the ATR, goes down again. These are extremely, extremely strong areas of support and resistance. I'm looking for Ford now to come back and test 1441. If it does it on diverging volume, then I think we'll see 1550. Over on Priceline, you can see flip the ATR. I know we did that because we have a line of congestion dots. Then it forms congestion dots up here, does it on a decrease in volume. What happens? It goes down, goes back to test the ATR here. Even though it looks like it's an increase in volume, the next magenta bar shows you that seller steps in, moves down, flips the ATR, goes to the congestion dot, does it on decrease in volume. What happens? It goes back down. Comes back to test the ATR here. Goes back down. Goes to the congestion dot. Forms divergence. Back to the ATR. Then, as it's coming back to this ATR, you see there's a decrease in sellers. Goes straight back up to that congestion dot. Tests the support area from the higher time frame. The green lines are the 90-minute, then it goes back up. Apple. Everybody's been talking about Apple. Do you see, and I'm going to enlarge this just so you can see, sellers actually stepped in and controlled the bar here. That was an extremely, extremely low risk entry area. In fact, you were entering as that bar made a high. Okay? That is a low point of entry. What happens? It goes down. Over here, do you see the volume divergence? Then it goes down. Here, you have volume divergence because this bar is higher than this one. Again, volume divergence. It works. Any market, any time frame, doesn't matter. I trade, when I'm trading stocks, I use a 30-minute, then a 90-minute, which are the green lines. The red line is a 390-minute because that equates to a daily stock chart. Right now on Apple, I would expect it to come back to 122. When it comes to 122, I would be reading the volume. Just shows how simple this methodology can be on any of our markets.